right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Thursday, everybody. Today is April 17th, 2025. And the top story this morning is the Federal Reserve. The Trump-Powell drama is back. And it's petty and it's silly, but there it is. And it's the biggest story in finance this morning. So what happened? Well, it all started yesterday. You could say it all started in 1913 with the creation of the Federal Reserve, which was a terrible idea to begin with, but I digress. Yesterday, we had Jerome Powell gave a speech at the Chicago Economic Club. And it was your typical Powell speech, right? A lot of the totality of the incoming data, and my colleagues and I remained acutely aware of the hardship and all that other blah, blah, blah. We got all that stuff. Now, here was the takeaway. The entire speech can be distilled down into this convenient 9-second clip. By the way, guys, watch your audio when I play this. Sometimes StreamYard makes them a little loud here, but here is what Jerome Powell had to say yesterday.
For the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance.
For the time being, we are well positioned to wait for greater clarity. And it's like we just took as many positive words as we could and we squeezed them into a sentence that said, we're not going to do a damn thing. But that way, when we say we're well positioned to await greater clarity, well, it just sounds like a proactive measure when really they're just sitting there doing nothing. Of course, doing nothing from the Fed wasn't so popular with the stock market, which was in the midst of a sell-off already when that speech began. The market would accelerate to the downside. The NASDAQ in particular closed particularly lower yesterday. It did. There was a little bit of buying into the close, so that was a nice little relief rally at the end there. But Powell's do nothing did not help market conditions yesterday. And this morning, as he's prone to do, President Trump took to Truth Social to voice his displeasure about the Fed governor. And here is what Trump had to say. He said the ECB is expected to cut interest rates for the 7th time, and yet too late Jerome Powell of the Fed, who is always too late and wrong, yesterday issued a report which was another and typical complete mess. Oil prices are down, groceries, even eggs are down, and the USA is getting rich on tariffs. Okay. Too late, should have lowered interest rates like the ECB long ago, but he should certainly lower them now. Powell's termination cannot come fast enough. So a lot of all caps there, a lot to unpack in the statement. President Trump wants Jerome Powell to lower interest rates. All right, now look, I have a lot of criticisms here on both sides. So let me start with the good. What I like about this. The Federal Reserve is doing nothing. Let's all take a step back and appreciate just how wonderful that really is. After the last 5 years, I think we can all agree that Jay Powell and his money printer and his interest rate machine have made a fine mess of our lives. And, well, the Fed doing nothing, I can't help but think that's got to be good for the average person. Hands off the panel, sit back, and just let the economy work the way it wants to work. Stop messing with things. That's kind of been my position since day one on this channel. All right. So I think we're kind of like in a good place here. Now, that being said, the Fed is doing the right thing, nothing, but they're doing it for the wrong reason. Now, a lot is going to be said in the coming days about Fed independence and how crazy it is that President Trump is injecting politics into the Fed. And I agree with that. The Fed, if we must have a Fed, it should be independent. The Federal Reserve should not be an instrument of political whims. Otherwise, we'll never get anything but a dovish Fed. It'll be modern monetary theory. Every president will just be a contest to see who can print the most money. Not good. Not where you want to be. That being said, I kind of wish President Trump would somehow fire Jerome Powell, but not replace him. Just be like, we're not going to have a Fed anymore. But you know what? It's the 2020s. Jack doesn't really get what Jack wants in the 2020s. Now, the other thing about Fed independence, let's take a step back from this and let's be honest with ourselves. How can you look at market conditions today and what happened in the bond market in the last week? How can you look and say a rate cut is not justified today while at the same time defending 50 basis points back in September when there was no ruction or ruckus in the bond market. Nobody can honestly, at this point, how can you possibly look back in September and say, yeah, that was the right call, but doing nothing today is the wrong call, or doing nothing today is the right move? What's the difference? The election is the difference. All right. So when everybody's talking about Fed independence and, oh, it's so important that it be above politics, let's be honest with you. That is a BS statement. The Fed is not above politics. The Fed hasn't been above politics for a long time. What President Trump is trying to do with the trade war, he's going about it clumsily and haphazardly, and he's doing it with his typical personal flair. But what he's trying to do to reshore domestic manufacturing is the right thing for the country. You can debate about whether he's going about it the right way or not. And the Federal Reserve and the people the Federal Reserve represents, it's owned by the largest banking families in the country, people who are so obscenely powerful they can afford to have their names and pictures scrubbed from the freaking internet. Well, those people stand to lose a lot of money if manufacturing gets reshored into the United States. In other words, what President Trump is doing flies in the face of the puppeteers who control the Federal Reserve. It flies in the face of their interests. And so is the Fed really independent to begin with? Probably not. Should Donald Trump be able to fire the Fed and replace him with a dove who's going to do whatever he wants to do? Definitely not. Let's just not have a Fed. I can't help but throw that out there. Hashtag end the Fed. I use it almost every day. So that's what's going on with the drama this morning. Other big stories going on. United Health stock is crashing on higher than expected demand for outpatient services. It's dragging the whole Dow down. We'll take a look at that one. We've also got two stories flying under the radar in China. All right, back under the trade war. You know, everybody's like, China holds all the cards. They make all our stuff. Things are going to get so expensive. Understand, guys, China still has a gaping, gushing laceration in its economy that is its collapsing housing market. And it's been going on for years because they've been doing a lot of what we've been doing here in Wall Street. They've been playing this big game of the floor is price discovery, trying to avoid finding out what this crap they're holding is worth. Well, today there's a story about the former Evergrande CEO being back in court. Wait till you hear what he had to say. By the way, Evergrande still has not been liquidated. They still haven't sold off the assets to pay the creditors. So the contagion risk was never realized. It was never processed through the system. They're just shoving the crap in the closet and leaning against the door to keep it closed. Well, now you've got a trade war going on the other side of the room that demands your attention. You can't let go of the closet door. All that crap's going to come spilling out. So China's got big problems here. And there's also developments in court about the Evergrande liquidation hearing. That's rolling through Hong Kong court. Zhongrong, remember the biggest shadow bank in China that they defaulted on their wealth management products, which are basically just Ponzi schemes back in late 2023? Well, something gone wrong over at Zhongrong because their custodians are now saying that Zhongrong is insolvent. They're going to have to be liquidated. That's in the press today. The point is, will this trade war re-aggravate, pry open this big wound that is the housing collapse in China, a wound that never healed? It's still bleeding. By the way, we've got our own problems here stateside. We've got a whole AI bubble that's going on here. Big problems going on in AI this morning. There is an investigation going on into DeepSeek, probing whether DeepSeek should be banned in the United States. A House congressional committee has just launched an investigation into NVIDIA and whether they were knowingly, illegally selling their chips into China. Oh, you know that thing that everybody pretended wasn't happening for years, even though it was staring them in the face? Well, now there's a congressional committee looking into that. So are we going to have Jensen Huang hauled in front of Congress to explain himself about how all those H-100s ended up in China? Gee, who could have seen that one coming? Shout out to my buddy Kakashi on X, who has been all over this story for a long time. Also, Microsoft caught a downgrade this morning on potential lackluster prospects for earnings in AIs and data centers. Guys, that AI bubble, as China's got their real estate bubble problem they're dealing with, we have got our multi-trillion-dollar tech bubble that we've got to deal with, and then we're both fighting a trade war on top of that. Oh boy, things could get messy in a hurry. We also got a Philly Fed manufacturing index took a big dive this morning. We'll take a look at that. We got some initial continuing jobless claims data, whole lot of stories to get to this morning. So why don't we just shrink my big melon of a head and let's see what's going on in the markets. By the way, guys, don't forget to hit that like button and that subscribe button. And before I forget, I just want to mention tomorrow being Good Friday, the markets are closed. So in keeping with tradition, we will not be doing a live show this time tomorrow morning, but I am recording an interview with Ms. Melody Wright and John Comiskey later today about a very recent big development in the housing market. And I'll be running that video during our normal time slot tomorrow morning, so you can still get your daily melon head fix should you feel so inclined, same time tomorrow morning. Right now, we've got the S&P 500 is modestly positive here. We're up by about 18, 19 points, 0.37% higher. Not a lot of movement in the S&P. Now, take a look at the Dow, down 461 points, 1.17% lower for the Dow. And guys, it's all one stock. You can see it all happened right around 5:50 a.m. Eastern time this morning. So WTF is going on in the Dow? Well, it is United Health, which is the single largest component of the Dow 30 index. The United Health shares tank on steep forecast cut as medical care costs soar. This is dragging the whole index lower. United Healthcare Group cut its annual profit forecast on Thursday in anticipation of higher than expected medical costs, triggering a 19% sell-off in shares of the industry bellwether that reverberated across the sector. The bleak forecast took investors by surprise as they were expecting the insurer, which kicks off the earnings season for the sector, to maintain its profit forecast on expectations that demand for medical services had stabilized in recent quarters. Now, we've been talking about this for about a year now. After COVID, a lot of people, especially a lot of older folks, were avoiding hospitals. They didn't want to pick up the bug while they were there. And so they put off having elective procedures done. They were just avoiding going to the doctor. Now that the vid is largely behind us, they're starting to do all that. That big backlog is coming to fruition. Now, it's been a couple of years that that's been going on. So I think the market was kind of hopeful that that was over, but it's not. United Health, however, said heightened demand for outpatient and physician services in its Medicare Advantage plans, which serve older adults and those with disabilities, was far above the planned 2025 increase. United Healthcare Group grew to serve more people more comprehensively, but did not perform up to our expectations. And we are aggressively addressing those challenges to position us well for the years ahead, said CEO Andrew Whitty in a statement. And take a look at United Health stock. It's off its lows of the morning, currently down to 16.6%. It was down 21% at one point this morning. So United Health is dragging the entire index lower. That's why the Dow is so much lower than the S&P and the NASDAQ this morning. Looking over at the NASDAQ, it's actually positive despite the big move lower in the Dow. 126 points in the green for the NASDAQ this morning, 0.2% higher. Looking over at the U.S. dollar, we have got the Dixie is at 99.46. That's a little bit stronger than we were yesterday, although still below that 100 threshold. Checking in with what's going on in Japan, we're at 142.25 on the USD JPY chart. That is the number of yen it takes to make $1. Now, we were watching the yen continue to strengthen yesterday. We went as low as 141.636 before recovering a little bit. The yen is modestly weaker this morning here at 142.24. But still, guys, a big downtrend in this chart. And remember, this chart moving lower, that is the yen strengthening here. So keep an eye on what's going on in Japan. There was a lot of talk yesterday about this meeting between the Trump administration and the Japanese finance minister. No deal was signed. They basically just agreed to have more talks in the future. So no big news out of Japan this morning, but watch that yen level. That is an important one. Looking over at the U.S. bond market, we've got a mixed bag this morning. The 30-year yield is modestly lower by about 0.5 point here, 4.743. The 10-year, meanwhile, is up by 1 point at 4.289. The 2-year yield is at 3.779. That's down almost 1 point. And the 1 month is down a point and change at 4.290. So the bond market is unusually calm this morning. And looking over at commodities, gold. Look at gold. It's dropping this morning. Gold is down. So that's a thing. Apparently, gold does go down. It remembered how. All the way down to $3,327, which would have been an all-time high about 12 hours ago. But look, gold ripping these last couple of days. It's taken a breather this morning. It's actually probably a good thing that gold is not just going up in a straight line, 0.5% lower, but still well above $3,300. At one point this morning, spot gold hit $33.57. I mean, just take a minute to it. Just appreciate the scale and the pace of this move in gold that we've seen in just a couple of days. I mean, there were 3 or 4 days in the last 2 weeks where gold was up roughly $100 in just a day. It's not supposed to happen, guys. When I started doing this, gold was $1,600 an ounce. Meanwhile, spot silver also a little bit lower this morning, $32.52. That's lower by about 24 cents or 0.75%. We've got copper is down by 1.3%. Palladium is down platinum is down 1.4%. Palladium is off by about 3%. Oil's a little bit higher again here, $63.46. That's up by almost $1 or 1.5% this morning. Not really sure what's driving that optimism in oil. We've seen oil rise about $3 over the last couple of days, despite some really terrible macroeconomic news. We got some more pretty terrible data from the Philly Fed this morning, so I'm surprised to see oil is higher again here. Now, let's move on to these stories coming out of China here, guys, because these are pretty important stories. And, Evergrande, there's a name we haven't heard in a couple of years, right? When I first started this channel back in 2021, we were talking about Evergrande almost daily. It kind of fell by the wayside, but they never fixed the problem. They just swept it under the rug, shoved it into the closet, hide it. The in-laws are coming to visit, whatever. Former Evergrande CEO says asset disclosure puts him in danger. That's pretty funny. All right. There's the CEO of a company that's like one of the biggest bankruptcies in history, also one of the biggest accounting frauds in history. And he's like, I can't tell you what I own because it might get me hurt. That's kind of funny. Let's be honest. Don't you dare feel bad for Mr. Jia Haijun, by the way. Don't feel bad for this guy. He's a freaking crook. But Jia Haijun, the former CEO of China Evergrande, told a Hong Kong court that complying with an order to disclose his assets could place him in danger. Judge Russell Coleman ruled last month that Jia must comply with the disclosure obligations by 4 p.m. on March 28th or be debarred from filing a defense in the case. During Thursday's hearing, Jia's lawyer argued that disclosing his assets to liquidators could lead to the information being leaked to Chinese regulators. Liquidators said there is no evidence to support this argument, calling it a conspiracy theory. And Coleman said that Jia certainly, deliberately did not comply with his order, stating he doesn't even try. He added that Jia's location remains unknown. There's all kinds of fun stuff going on here. So first of all, let's keep in mind, this is a Hong Kong court. And so Jia's saying, I can't tell you what I own because the Chinese regulators might find out. That's not a conspiracy, right? I mean, China's regulators, they get whatever they want in Hong Kong court. So it's not a crazy conspiracy to imagine that Chinese regulators might somehow gain access to information if it gets filed in a Hong Kong court. I think it's a near certainty. But that being said, so what's this guy doing? Is he somehow trying to hide what he owns from Chinese regulators? And he's basically admitting that openly in the press? Maybe that has something to do with the fact that nobody can find this guy. Is he in hiding somewhere, or did he disappear? Did he get sent to the Jack Ma recreational facility for political realignment? Is that what happened with Jia Haijun? I don't know. This story is freaking hilarious here, though. Again, I don't really feel bad for this guy because he's a crook. He made all kinds of bad loan guarantees, and a lot of people lost everything when Evergrande collapsed. But this story is freaking hilarious. Now, there's more going on towards the bottom of this story. Once you get all this other stuff out of here about this Xi case, separately, High Court Judge Linda Chan on Thursday handed down guidance on the possible formation of a committee of inspection, which is meant to streamline Evergrande's liquidation. And that is just the most cautiously, passively aggressive whatever statement I've ever seen. The High Court George handed down guidance on the possible formation of a committee to maybe inspect the possibility of eventually selling all the stuff Evergrande had in order to raise the money to pay the people that they owe it to. Look at them dragging their feet. They're handing down guidance on maybe forming a committee to look into it. They still have not sold off Evergrande's buildings. That's the point here. While they're still bickering and the CEO is hiding from regulators, afraid to tell everybody what he still owns, they still have not sold this stuff. This has been going on for years, and they're just hiding it. They're doing the same thing. Look, our guys do it too with commercial real estate, right? We do it with private equity holdings, private credit. The biggest focus, the singular focus of most professionals in finance these days seems to be the avoidance of price discovery. What does that tell you about the state of economics, about the state of finance? It's a house of cards, and it's going on in the States, it's going on in China. And we got this one too. China's shadow bank that oversaw $108 billion faces liquidation. Liquidation that I'm sure will be brought to an abrupt close sometime between now and 2060. Zhongrong International Trust, one of China's largest shadow banks before it defaulted on billions of dollars worth of wealth products, is facing liquidation after its two state-appointed custodians concluded that the firm is insolvent. That is, according to people familiar with the matter. A winding up proposal for Zhongrong, which had 786 billion yuan, or about $108 billion US, of assets under management as of 2022, was recently submitted to regulators by CITIC Trust and CCB Trust, said the people asking not to be identified. No final decision has been made by the authorities. Zhongrong was placed in custody in late 2023 after missing payments on multiple trust products. In total, the Northeastern Harbin-based firm had defaulted on about 250 billion yuan of trusts sold to more than 30,000 individuals and 2,000 institutions. That's according to investors, citing estimates from Zhongrong executives. And right there, you can see the contagion risk in the Chinese banking system. All right, this 250 billion yuan of trusts, which the firm is insolvent. They don't have enough money to cover what they owe. And they owe it to 30,000 wealthy people and 2,000 institutions, i.e. banks, hedge funds, other shadow banks. So the counterparty risk, let's say Zhongrong defaults and some of these institutions don't get paid back. Well, who do they owe money to? And who do they owe money to? That's when the contagion risk starts to really take off and these losses can snowball. And again, this is a firm that defaulted on these products back in late 2023, whereas Evergrande defaulted all the way back in 2021, and they still have not resolved these issues. They're dragging their feet. Now, we've got plenty of problems here in the States to go along with it. U.S. allegedly aims to crack down on DeepSeek and NVIDIA. This one was in the New York Times yesterday. You're not hearing a lot about this story. Actually, you hear next to nothing about this story, but this is a big one. The United States administration started to move towards cracking down on the Chinese AI company DeepSeek and its U.S. chip supplier NVIDIA. The New York Times reported on Wednesday, citing three sources familiar with the matter. There's those people again. Washington is considering penalties that would impede DeepSeek from acquiring U.S. technology and is discussing banning Americans from accessing its services, according to the report. On the other hand, the House Select Committee on Strategic Competition between the United States and the Chinese Communist Party launched an investigation into NVIDIA's chip sales in Asia, aiming to make clear if the chip maker knowingly made critical technology available to DeepSeek, violating U.S. regulations. NVIDIA earlier revealed that it expects to lose $5.5 billion in sales after the U.S. imposed restrictions on the exports of AI-based chips to China. Why is there no news about this in the financial press? The fact that NVIDIA is under investigation for knowingly selling technology to the Chinese illegally. Okay, yeah, it's a congressional committee and there tend to be a circus and they don't, well, Congress is famous for doing nothing more than anything else. But the prospects of their CEO being hauled in front of Congress to answer for how their chips ended up in China, don't you think that's information that maybe investors want to know? Don't you think that's something that maybe a Bloomberg or a CNBC ought to be covering? Or maybe a Market Watch who told you, don't listen to me. Maybe they ought to be covering this story. I don't hear a lot from them. NVIDIA stock pretty much unchanged this morning. It was down big yesterday on that $5.5 billion write-down that they were taking because of the H20s. But this morning, it's barely moving here, $104.43. Not surprising because nobody knows about the story because no one's covering it. Meanwhile, Microsoft catches a downgrade from KeyBank on increased scrutiny of AI demand timing. That's interesting. A Mag 7 company catching a downgrade here on the AI bubble possibly bursting. KeyBank Capital Markets downgraded Microsoft shares to sector weight from overweight in a note on Thursday. The bank cited growing investor concerns regarding the timing of artificial intelligence demand and monetization, as well as increased capital expenditures that may pressure short-term margins. Pay attention, guys. Any day now, we are going to hear from Microsoft that they are going to cut their CapEx, that Microsoft has stuck to that $80 billion number like glue, but they're cutting data centers all over the world. We've all seen the reports. Now they're catching a downgrade because they're spending too much on CapEx and they're worried that they're not going to make any money off of AI. Microsoft will be cutting their CapEx soon, and when that happens, you better believe NVIDIA stock is going to sell off. We are downgrading Microsoft to sector weight from overweight and removing our price target on the heels of increased scrutiny on the timing of AI demand and monetization. In other words, nobody's making any money off of all this money they're burning. They warned that Microsoft's large capital investment plans offer limited one-year out flexibility that could weigh on margins, particularly in a weakening macroeconomic backdrop. Now, Microsoft stock not reacting hardly at all here. It's actually up about 0.6%, $374.19 just after the ringing of the bell. Separately, in the semiconductor space, we had Taiwan Semiconductor denies that it's talking to Intel about a chip-making joint venture. Now, Taiwan Semi reported earnings this morning that were pretty good, but within those earnings, they denied this joint venture. It's a story we were covering last week. They were reporting that Intel was cutting an agreement with Taiwan Semiconductor where Taiwan Semiconductor would operate these new chip factories that Intel's going to build in the United States. Well, apparently that story was fake news, or maybe somebody's lying. I don't know, because Taiwan Semiconductor, they're denying it. They're saying, nope, not happening. So interesting developments there. Now, look, guys, we typically don't cover pharmaceutical companies here. It's just kind of an issue I have. I just kind of hate pharma companies. So I was hesitant to put this one up here, but this is probably a pretty big story and a lot of money is going to move around. So we're treading into the pharma space here where I don't usually like to go because it is a wretched hive of scum and villainy. That being said, Lilly's first pill for diabetes and weight loss shows positive study results. The drug helped lower blood sugar and cut an average of 16 pounds. By the way, I don't have positions in any of these companies. The first GLP-1 weight loss pill is a step closer to hitting the market. Eli Lilly said its experimental pill met its goals in a pivotal study, helping diabetes patients lower blood sugar and even reduce weight, bringing an oral version of the booming class of drugs closer to patients seeking to lose weight. Physicians and patients have been hoping for pill versions of popular GLP-1s, that's your Ozempic basically, for weight loss. Approved versions are all given by injection, and a pill would be a more convenient option. Now, Eli Lilly's stock is ripping on this news this morning. I should have had the ticker up here. Where is it? Where is Eli Lilly? There it is. Ticker LLY. They were up double digits the last I looked. 13.8% on this news, up over $100, trading at $836. So a big move like that in a company as big as Eli Lilly. This is a $750 billion market cap company. That's why this one was worthy of coverage this morning. A few more quickies this morning, guys. We got initial jobless claims data came out, and it was a pretty good move to the downside on initial jobless claims here. 215,000 initial claims filed. That's versus 224,000 a week ago. So people are losing their jobs at a slightly slower rate. Okay, that's good news. But now let's look at continuing claims. This is a trend we've seen for a while. Continuing jobless claims ticked up to 1,890 some odd thousand, or 1.89 thousands. That's a pretty big step up from 1.84 last week. So we have seen this trend of slowing job losses, but people are still piling up in unemployment because there are fewer jobs available. Once you do lose your job, we're back to this higher end of the band. We've been kind of bouncing around here. So watch that labor market. That's an important one. And the Philly Fed Manufacturing Index just came out this morning, and it plunged to plunged by 39 points to negative 26.4 in April. That's compared to a positive 12.5 in March. All right. Now, this is April data. So this is post-tariff data. And you can see American manufacturing in Philadelphia way down. I kind of thought tariffs were supposed to help manufacturing, but I digress. That's a pretty big negative number, negative 26.4. And I just want to put that into context. Let's zoom out on a 10-year chart here. And you can kind of see, guys, we are now as low as we've been since pretty much just after the banking crisis in the first quarter of 2023 was the last time we were this low. Before that, you're talking COVID lows. So that was a pretty big step change down. Now, it looks like most of that is coming from new orders. The new orders index for the Philly Fed dropped to 34.2, or dropped to negative 34.2 from positive 8.7. Big decline in new orders for manufactured goods in the Philly Fed region. Now, again, if we zoom out to 10 years, we're actually worse than we were in March of 2023. We've taken out that low for new orders, and we are down into areas we haven't seen since the height of the COVID crisis. Now, in COVID, we bottomed out at negative 70, which was even a lot worse than we are now. But the Philly Fed numbers were pretty awful here, guys. And this is April data, so this is after the tariff announcements. And I think it stands to reason that the tariff announcements playing a big role in this data being so terrible this morning. So market is not going to like that one. And I just want to say thank you very much to my man Mish, who's doing the housekeeping here, burning his super chat. Thank you, Mish, for being a Melonhead for 14 months, by the way. And thank you for reminding people, no show tomorrow because markets are closed for Good Friday. Reverse repo, really low. That's interesting. We haven't looked at reverse repo. All right, we're going to bring that one back up real quick. We are going to unshrink or unshrink. We're going to reshrink my melon of a head. Where's my reverse repo link? There it is. Okay, reverse repo down to 54.77 billion. All right, still some extra cash sloshing around in the system. But you can see here, this is going back to about the middle of last year. Reverse repo down to 54.7 from a high of 399 that we hit at the end of March. We typically have those spikes at the end of the quarter. So we are seeing that excess liquidity burn up a little bit here. Not surprising considering what we've seen in the bond market. I'm actually a little surprised this isn't happening faster considering how bad things got in the bond market. But the ground is getting closer, guys. We're getting closer to that zero in reverse repo. Thank you, Mish, for pointing that out, brother. I appreciate the super chat and everything you do for the channel. Uncle Fedster says, instead of terminating Powell, how about terminating the Fed? I like it. I love it, Fedster. What an idea. Have we tried not having a Fed? Yes, as a matter of fact, we did. We didn't have a Fed for what? The first 145, 150 some odd years of the country, there was no Fed. It can be done. So don't threaten me with a good time, Uncle Fedster. I'm Jack Gamble, and I approve this message. Thank you, sir, for supporting the channel. Appreciate that very much. Steve Canyon says the Federal is broke. September was a setup for failure. We're talking about the Federal Reserve is broke. Now, the Federal Reserve is sitting on a very big pile of losses. That being said, somebody who controls the money printer, someone who can print their own currency, technically can't ever go broke, but they do have a limitless capacity to steal from us in that's how they avoid going broke. September was a setup for failure. I think we're talking probably about that 50 basis point rate cut that we saw in September, which again, I don't know how you possibly defend that at this point. That was so clearly a move meant to juice markets in the run up to the election that, you know, for everybody who's crying Fed independence, and yes, if you have to have a Fed, they should be independent, but let's not act like we have an independent Fed. We don't. All right. September was proof of that. Thank you, Steve Canyon, for supporting the channel, sir. Nashville Pasta Man says, wait, Judge Russell Coleman, excuse me? Yeah, I was a little surprised. How many Russell Colemans could there really be in Hong Kong? But remember, Hong Kong was a British territory right up until a few years ago. So I'm guessing Mr. Russell Coleman is a former citizen of the Crown who decided he liked it in Hong Kong and stuck around. And now he's a judge there. Yeah, Russell Coleman is a judge in Hong Kong. That I did a double take on that one as well, Pasta Man. Thank you, sir, for being a Melonhead for 14 months and for supporting the channel. He says, in politics, the closer you get to elections, the more accurate polling is. I suspect the same is true for financial reporting into a correction. That's kind of like a play on as the tide recedes. You find out who's been swimming naked. The further you go into market corrections, the more and more you find out who has been full of it in their accounting. And look, if these things get really bad, like the trade war and what's happened with the H-20s and that $5.5 billion hit, and then the timing of this congressional committee announcement, all right, we end up elbow deep in this trade war. NVIDIA has been selling a lot of GPUs to China, guys. All right, this is not a conspiracy theory. You have to be deaf, dumb, blind, and willfully ignorant at this point, as a lot of these NVIDIA bros clearly are. But at this point, anybody can look at the mountain of evidence and say it is obvious that these NVIDIA GPUs in huge quantities are making their way into China. Is NVIDIA aware of it? They have to be aware of it. Are they turning a willful blind eye to it? Are they not taking action to stop it? That last question is where it rises to criminality or not. And that's what this congressional committee is supposedly going to look into. And if they are, well, just imagine a $16 to $18 trillion tech stock bubble being inflated by crime. And what does that mean for the average person's 401k and the average person's IRA? And then ask yourself, why has Jack been pounding the table on this company and the crooks that run it for so long? That's why. Because I've been trying to prevent average people from losing their freaking retirement while Wall Street and Silicon Valley get rich selling hype. That's why. Thank you very much, Pasta Man. And I agree. I think we are going to learn some pretty awful things the longer this trade war goes on. Armando Reyes, thank you, sir. He says, I raise my glass of good old Southern sweet tea to the news of IRS agents resigning. Yeah, once again, don't threaten me with a good time. Guys at the IRS want to quit. Hey, you want to get rid of the Fed? Hey, man, let's downsize. One day only. Everything must go. We're having a fire sale on government agencies. Don't let the door hit you. Where the good Lord split you. Thank you very much, Armando Reyes, for supporting the channel. The Dragon of Revelation. That's a profound name. He says, have you seen South Korea's fertility rate? It's bad. South Korea, I think, is the worst in the world. Don't quote me on that. But yes, South Korea, very bad. Japan, very bad. China, very bad. The United States and Europe, very bad. Take away immigration into the United States and our population is falling. We forgot how to make babies. Guys, are you confused on how this works? I mean, I try to stick to finance. I'd rather not get into those weeds if I could help it. But science knows what causes babies. Do a little research, do your own DD, figure it out. Barry White, bourbon, go make some freaking babies already. All right. We need to start having babies. And by the way, with kids comes a future, comes a reason to get your shit together, comes a reason to, be a better person and live a better life because an innocent life is dependent on you. All the things and prosperity that comes along with having kids when you don't have kids, and then you wonder why we're spiraling into degeneracy as a society. Because why aren't people having kids? There's a good question. Because they can't freaking afford it. Because they can't afford a house. Because their wages aren't going up, but their cost of living is going up. See also, and the Fed. Absolutely. And look, what's going on in the Fed and the inflation that they're creating, it is happening by extension in pretty much the entire world. All right. I mean, you've got Southeast Asia, South America, and Africa are the only places in the world where the population is still growing. Everywhere else, it's in decline. Almost the entirety of the Northern Hemisphere, the population is collapsing right now. We need to start making babies again. Thank you very much to Dragon for supporting the channel. Steve Canyon says, you're right. We will bail out the Fed through the Treasury. Bail out the Fed through the Treasury. That's okay. So when the Fed's losses, the Fed's unrealized losses, it's just this big negative number. That doesn't necessarily mean the Treasury needs to write a check to the Fed. That just means the Fed will sit on those losses. And then typically what happens when the Fed makes money, any of their profits would get sent over to Treasury. Instead, those profits will just go to minimize their losses. So yeah, by extension, the Treasury would bail out the Fed from their big pile of losses on all the garbage bonds that they bought during COVID and the GFC, much of which is still sitting on their balance sheet. Let's just not have one. And the Fed. Let's just see what happens. How much worse could it get? I mean, you got 1 million people living in tents on the streets of American cities right now. So, I mean, what? You're going to have 2 million if we don't have a Fed? Maybe we'll have fewer. Wall Street probably lose a lot of money, but the people in tents would be doing a whole hell of a lot better. Call me crazy. Let's give it a shot. Thank you very much, Steve, for supporting the channel. Thank you, everybody, for having your coffee with the Melonheads. Reminder, no show tomorrow morning, but we will be running that interview with Melody and John Comiskey about the FHA fraud going on in the housing market. Look for that one tomorrow morning. Thank you guys so much for the super chats and support of the channel. Also, you magnanimous Melonheads on Patreon and YouTube. Thank you guys for everything you do. Links down below should you feel so inclined. Don't forget that like button and that subscribe button on the way out. Hi, Mom. Hi, Dad. Love you guys. Till next time, live small and dream big.